this market is looking for reasons to sell off in the equity side. Now, whether or not that's good for crypto, we're going to find out. Right now, it is good for crypto. All right, even though you're seeing a little bit of a bounce here, a lot of that bounce in crypto is a relation to the banking crisis and the safety trade, right? We see the Bitcoin leading the charge. Bitcoin is your pure play when the banking crisis is going on. Sure, you're seeing a bit in Ethereum, but it's not the same magnitude that you're seeing in Bitcoin because Bitcoin is a pure play.
Hey guys, welcome back to Let's Talk Crypto. The banking crisis continues to unravel, and as some analysts like Greg Foss have already predicted, First Republic Bank is now also in trouble. In today's video, we have pro trader Gareth Soloway to share his outlook on the markets in light of this event. Gareth points out that Bitcoin's price has bounced in response to the downfall of FRC, and calls Bitcoin the pure play during a banking crisis. On the macro side, Gareth is looking at the Federal Reserve's interest rate announcement next Wednesday to determine how the markets will react to a potential 25 basis point hike, followed by some hawkish commentary. Overall, Gareth believes the stock market is likely to sell off in the face of a coming recession, which could affect crypto as well. Let's listen to Gareth Soloway as he shares his outlook on the crypto market and makes his predictions for gold in 2023. But before we do, please consider subscribing to our channel, as we bring you daily content on the latest crypto news. And now, let's jump right into the video.
Let's get right into the chart. Let's take a look at what's going on in Bitcoin here, guys. All right, so Bitcoin is ripping to the upside, just hit resistance at 30,000. Now remember, 30,000 to 30,500 is your key level of resistance. You can see what's gone on. Basically, since yesterday, when FRC, all right, First Republic Bank, when they basically had their earnings announcement, they came out and said that, hey guys, we lost 40% of our deposits in the last quarter. In addition, we saw essentially our business stagnate. All right, that was not what Wall Street wanted to hear. 40% is a bigger number than Wall Street expected. And then to add on even insult to injury, all right, this is the kicker, guys. First Republic, FRC, they basically did not take any questions from analysts in the conference call, and they just said, done. And they walked away 12 minutes after they started that earnings call. All right, to me, all right, now remember, JP Morgan, Wells Fargo, all these big banks gave them $30 billion to shore them up. All right, this was a couple months ago when the banking crisis occurred. And for them to just say, hey, we're not even going to take any questions, that is not basically, that's not uplifting to the sector. And so that stock got pummeled yesterday. And as soon as you saw it down 40, 50%, Bitcoin began to uptick and it started to go better and better and better. Now, the bottom line is, as an investor, this is all inside of the levels. If we look at the chart on the daily chart here, let's go to the daily. So what we could see here is this is your 30,500 level. That is essentially your line in the sand. Like I just said, 30,000 to 30,500, that's what you're keeping your eye on. If we get above 30,500 and we close, you want a daily close, and then you want multiple days, I say 5 to 7 days above that 30,500 level. Now you have a confirmed breakout and you likely could head higher. Aside from that, be very skeptical of this move, because if the banking crisis does not get worse, this resistance at 30,500 to 30,000, that could ultimately end up being a top, and we still could see Bitcoin moving back to the downside. And okay, so let's go back into the charts here. Let's look at Ethereum. What do we have on Ethereum? Ethereum is rallying, but look at the chart here. Look at where we're hitting. We're hitting resistance on Ethereum here. This upsloping trend line, a beautiful upsloping trend line. This is the key point. Now, one of the things I want to mention here, look at how Ethereum is not at the recent highs like Bitcoin is. What does that tell us? It tells us that Bitcoin is your pure play when the banking crisis is going on. Sure, you're seeing a bit in Ethereum, but it's not the same magnitude that you're seeing in Bitcoin, because Bitcoin is a pure play. Always remember that in 10 years, 20 years with Bitcoin, it's the pure play, just like gold is the pure play. If I had to put it in comparison, I would say Bitcoin is to gold as Ethereum is to silver. All right, think about that. Think about how silver doesn't really go one for one with gold, because silver has an industrial side to it plus a store of safety. Gold is just a pure store of safety. So kind of a cool little concept to think about Bitcoin equals gold. Ethereum is equal to silver when it comes to investing. All right, so watch this level around 1960 on Ethereum. That is going to be a very pivotal level here. Let's see if we get through that. I'm still in the camp on a macro basis, by the way, that we still see a recession in the second half. You're seeing economic news continue to weaken, the jobs number continue to weaken. All this stuff is continuing to show us likely recession. By the way, the Federal Reserve actually told us a mild recession in the second half. Like I've said in so many interviews since I said this the first time, if they're saying mild and they said transitory, and look at what we got, all right? They said transitory inflation, we got horrible inflation. They say mild recession, it's probably going to be a little bit worse than mild recession. By the way, one more little tidbit, the Fed will be announcing a rate decision next week on Wednesday. The expectation is a 25 basis point hike in interest rates. So they're still hiking here, guys. They're still tightening the noose, if you will, around the economy. If we go to the SPY, all right, here's the SPY chart, and I have a lot of little trend lines on this chart from day trading. But bottom line is, what we can clearly see here is that we are gapping up on the spiders. But this is what's interesting to me, right? Is that even with all this good news on earnings, look at the spiders. We're only getting back. This is where we closed yesterday, right here. And this is where we are today. You're only up about $1 on the SPY. Now, part of that is the bank stocks. I saw FRC was still down. Yep, it's still down, folks. So again, that's still under pressure. But the bottom line is, even with the good earnings, you're not seeing a huge impact on the S&P 500. So what does this mean to me? It means to me overall, this market is looking for reasons to sell off in the equity side. Now, whether or not that's good for crypto, we're going to find out. Right now, it is good for crypto. All right, even though you're seeing a little bit of a bounce here, a lot of that bounce in crypto is a relation to the banking crisis and the safety trade, right? We see the Bitcoin leading the charge. But bottom line is, you're not getting a very oversized move in the QQQ. And that to me would be concerning going over your next couple weeks of trading, especially ahead of the Fed next week, where the Fed is likely going to stay relatively hawkish and hike by 25 basis points. I want you guys really focused on understanding how important even numbers. By the way, that's one of the reasons why I looked at the 30,000 area to 30,500 on Bitcoin. By the way, look at what Ethereum did. Ethereum pierced 2,000 recently, right? It took out that previous high barely and then sold off. There's a tendency in markets, and this is psychologically based in human nature, for us to hit key levels and pierce them. All right, you have stops there. You have people that will jump on board at those levels. Think about how many people jumped on board on Bitcoin when it pierced 30,000 thinking it was a breakout. Yet ultimately it dumped out, took a lot of them out. Now it's retracing back up to that level. All right, so we're going to keep an eye on that. If we look at Bitcoin, by the way, it has pulled back off that 30,000 level very slightly, though, trading back at 29,850. All right, so again, we know 30,000 to 30,500 is resistance. That's really all you need to know. Remember, a technical trader doesn't care necessarily whether it's where Bitcoin's going in the next 6 months or 3 months or even 1 month. It's where's the resistance near here where I can tell if it's going to go higher or pull back. And right now you're up into resistance. You're just underneath resistance. Therefore, as a technical trader, you favor a pullback. If it gets through that level, you start to go into neutral. If it stays above that level, you go bullish. It's very simple like that. It's no emotional trading. It's pure and simple. Follow the levels. Let the charts tell you. And this is important. It's not the guaranteed move. There's no such thing in trading. All right. Every day I'm out of the money on a trade, or, with all the trades I do, there's always a trade, I'm losing here. I'm making money over here and here and here, but there's always going to be a little bit of a loser. So the point is that it's all about probabilities. If you do 10 trades in a day, you want to win 8 of them. And the ones you lose on, you got to recognize quickly that you're losing on them and exit them. That's how you make millions in the market. Stay with the charts, get emotion out of your mind, get that crap gone. You'll be a better trader and make more money by being a robot. All right. In any case, what we're seeing again here in the markets is a slight up day. We're continuing to grind higher. And again, what I'm looking at here, I can see if there's a couple questions that people want to look at. Let's look at gold. I want to make sure we check out gold here, see what gold's up to this morning. If we bring up gold on the charts, gold to me continues to be in a sideways consolidation pattern. Ultimately, this is the beginning of bullish consolidation that will lead us through the all-time highs on gold. But I still think you're due for a pullback to around the 1900 to 1915 level. If I zoom out the charts, and this is all charting again, just letting the charts dictate to me. Short term, we're extended. You just need a pullback right in this range, about $100 on gold. Then I think you bounce off of that and you start making new all-time highs. You break through 2100 and you're probably headed towards 2400 by end of year.
Once again, Bitcoin is proving to be the go-to place for investors in the face of a banking crisis, solidifying its status as a safe haven. What is your opinion of Gareth's outlook for crypto in the upcoming weeks? Let us know in the comments below. If you enjoyed this video, please make sure to give us a like and subscribe. Thank you so much for watching. This is Let's Talk Crypto, and we'll see you in the next video.